All right. Good morning, everybody. So Japan is up the most, nearly 0.75%. Hong Kong's down the most, 2%, and everything else just scattered in between. Small caps are down the most in the US, and right behind that, tech, then the S&P, and Dow down the least at 0.25%. There's a lot of talk right now about how the Fed may need to pivot, but they're not really talking about the dot plot. And that's really what changed the game back in November. So until the Fed actually just comes out and says they're not going to start cutting and that they're going to push back, then I don't think it's going to pick up a lot of steam. But just keep that in mind. They're unwinding all those rate cuts that they pulled forward. Right back in November, December, the market started to pull forward all those rate cuts. And in November, the Fed had not yet intonated, there's a word for Monday, Tuesday. They hadn't given any hint yet that the market was right. Then in December, they validated the market's behavior and we really took off. The idea was that we were going to start cutting in March. And we can see, if we look at our current rate and we look at the highest probable outcome for March, it's a rate cut. But we want to watch this one close. If they start unwinding this and they go for, higher for longer, just holding where we're at, they're going to unwind this. We're going to see this bar on the right start to rise back up again. And that's what we're already seeing. In one day, we went from 76% chance, 77, down to a 71. And this bar started growing from a 19% up now to 27%. Okay, so if this continues, we're going to see the S&P not rally. It doesn't necessarily have to go down, but we would anticipate this as major headwinds and a lot of negativity for the broader market. So want to watch the dollar, the 10-year, kind of see how everything's responding to this. And just keep in mind, not bullish doesn't mean bearish, right? There's a big distinction between bearish and just not bullish. So this is the March expiration, or the March FOMC, but these others along the curve are also worth keeping your eye on. It's not like you got to sit there and stare at them all day long, right? Just kind of revisit it a couple times through the day and make sure that nothing is changing that you hadn't already anticipated. We're expecting an unwind of the rate cuts. And when, Williams today is going to come out chipping his teeth. We want to make sure that he, doesn't say anything that makes the market reconsider. Because if they stop unwinding, even if they don't start pricing it back in, but they just stop what they're doing, that turns the headwinds off, right? It might not give us tailwinds, but it's no longer this weight around our neck that's holding us down, and the market could buoy up because of that. So we are going to get some manufacturing insight, and then we have Waller today. There's additional auctions as well, but they're way up front. So, looking at something like IRX will really give you that kind of visual on the front end of the curve. A lot of stuff coming out of China tonight, so kind of keep that in mind for any of your short duration swings. And that should bring your focus really tight into those China ADRs, BABA, Baidu, JD, PDD, those kind of names, and even the China EVs. right? The Neo, XPEV, Lee. So really something to consider before we get into the close today, right? And when it comes to options, you're better to buy long options when we're still falling, and you're better to buy short options when we're still rising. Price wise, it works better. Banks are continuing what they started Friday with earnings, and this is kind of a big deal. It's not just banks, but banks CEOs are like a bellwether, right? So how they come out talking about the forward outlook, that's really going to shake the confidence of the market if they come out talking about, dire warnings and it doesn't look good and they're worried. All of that's going to carry forward. Then there's just performance, how they doing. It's often said banks set the tone for the quarter. So if banks come out, against the ropes and getting a beat down, you're going to have a pretty good idea of what the rest of the earnings quarter is going to look like. Here's your optionality levels for the day. Just grab a screenshot of it if you're interested. This is for the SPX. I removed a lot of the, just GEX level 1, GEX level 2, that kind of stuff. I took it out so that what we basically have left is the expected move and then put support, call resistance, and the high value level, high volume level. So that's for the SPX. Here's for the SPY. And the Qs. And because of what we saw, that movement in the VIX, here's the VIX. All right, US dollar Japan woke up with a vengeance this morning. The cyan line that we see here is year-to-date VWAP. The yellow line here is from the 14th, 15th, 16th. So just kind of kicking it off. And then this morning. So I'm trying to do with these anchored VWAPs is start them at the front of the week, start them at the start of a new day, and start them at the start of the year. You can kind of do that on Thinkorswim, but they're a little wonky, kind of glitchy, hard to trust. The year-to-date's not bad, but the other ones, yeah, then they're not so good. Probably going to add one more for a monthly, but at the moment, we don't need a monthly because we're still in January, and that's start of the year. Still, with US dollar Japan, think of this very much like a representation of dollar and yields. So if this is going up, that's our expectation for the dollar and the yields, is that they're also going to go up, right? Not much to that. Other than that's our expectation. So with it being up this morning, that's what we're going to have to think about with dollar and yields, is that they're very likely up this morning as well. This is a breakout. So we've got an expectation of keeping an inside week breakout and that we're looking at not just one day with dollar and yields rising, but that we're going to have a bit of a retracement after the last few weeks in the dollar. So coming up off of that low from that strong reversal around 101, we're already inside a week breakout from that doji week, but that week isn't the week of concern. It's the week before that, right? So this last week from December into January, getting a breakout of that, we're above 103, basically, if you just want a line in the sand to kind of keep a hold of. The Dixie above 103, it's got to be a headwind for the market. We add that to CTA positioning and what we see with the unwind in FOMC projections, and it's hard to see where the S&P can get a rally here and the NASDAQ. It's not to say that they can't, right? These things won't make them go down. They'll just make it harder for them to go up. Big difference, right? So nothing on the TNX by itself yet. TNX, it's not going to open for a little while yet, but we can go to 10-year yields and just do it that way. Now that you can do on Thinkorswim as well. It's /10Y. So we're up this morning, kind of riding above VWAP. When we look at where we're at for the start of the year, you can see we're just really not gaining anywhere, right? Nothing's winning. Neither side is in control. We're just back and forth. So we're back above the yearly VWAP. It's a good start. This looks bullish. That is kind of a tell for the week. But we've got a lot of trash back here to work through. And right now we can just use candle in control. So we need to hold above 4% and call it 4.1 is going to be a level that, we can get there, but can we get through it? Even 4.05, honestly, I think is going to be, pretty difficult to get past. All of this across the top is going to be considered a sell zone. And until proven otherwise, I don't think it can get through there. So watch for the reversal in the dollar and watch for the reversal in the 10-year, because that will give us a little bit of a boost in the S&P and the NASDAQ if we can get the 10-year and the dollar to fall back. Watch for US dollar Japan to get up into that resistance as well and fall back with it. If we get those three falling back, we can get the S&P and the NASDAQ to lift up. So maybe midday V bottom reversal off the midday. Yeah, you like it. All right, volume is solid this morning. We're sitting in the 120s. Below, say, 70 would be really low volume. We'd want to go find out what's going on. And above 170, 180, we'd want to be a little concerned and we'd want to know why we get such heavy volume. Sitting in the 120s is fine. It just shows a good, solid start for the week, a lot of participation. And there's no hedging, at least not enough yet to register, because we're not seeing any market maker move up here. So we know they're not scared of anything. 4808 is a voodoo line. I believe that one's called a forest because it's green. That's imaginative. It is a significant level, but you can see how we've crossed through that zone a lot. And the more we cross through it, the less significance it has. So at one point, I'm sure it was very solid and valid, but what's more insightful this morning is the 10-day moving average, which we fell down earlier and we had a gap close to deal with. So we got that done. Now we're just overshooting the gap close, but we're back above that 10-day. There's another level on here. It's a little, it's a messy chart. I know. The daily pivot point, we opened up underneath it. That automatically puts us in a bearish bias, and that bias held all the way to the ADR half. When we get to the ADR half this early in the morning, it gives us the opportunity or the permission to go to the other side. You have to take your eyes a long way to the upside to find it, but it's yesterday's high. That's a long ways off. 48.32 is the cog line, and that is the price target for today. I'll be buying some S&P calls for that. Probably be trading the futures too, but I like a little bit of optionality. For SPY, it'll just be yesterday's high, right? If you want to equate that to the SPY options, be 478-ish, last week's high. Not too hard to target, right? Think we can handle that. So, you know, it's just as simple as that, trying to identify, and there's a market maker move, by the way. It's on the SPY. Flip it over to the SPX. Nothing's moving there yet, but 4,800. It's yesterday's high in the SPX. So probably not far enough away. I'll have to see how we get into the open before trying to figure out what options I'd want to use here. It's very likely that if we continue this bullish move that we've seen this morning with this carry on up off of the lows, it's more of a rebalance than bullish, right? I guess it's easier to say that. If we continue this regression back to the mean and it turns bullish, then we'll target the cog line here, 48.32, or the ADR full 48.30. I think that's well within our range, especially after that consolidation on Friday was really tight. Get something good out of it, at least. All right, we're a long ways away from the 10-week. We can see it all the way down here, and we're all the way up here. It's at 4,700 basically, and we're at 4,800. 48.11 is a cog line, so keep that in mind for the ES as we continue this drive to the upside, and those pivot points are going to be a concern. We found the weekly pivot point in this drop down, so now we've already made contact with that and established it. We'll see if it is a level we revisit, and if so, kind of dig into the optionality of it. One day isn't enough, or one touch, I should say. It's not enough. All right, so if we use the door, right, day one open range, it'd just be this white bar here. That's the high. And even if we were to use the 3-day open range, it's still the same high, because for the next 2 days after that first day was made, the next 2 days fell. So either way, whichever strategy you use, that's the high that we're continuing to fight against. And the whole thing should be considered a sell zone until we know that we've absorbed that liquidity, right? You're going to want to watch how the how that orders show up on the dome. If you're using stock on, say, SPY or something, watch the level 2. Really use the dome anyways, right? You can use the dome even when you're trading shares. You want to see how they're positioning around this high up here, because we have to absorb this liquidity before we can get through it. And if they don't get through it and they get frustrated and just give up, they'll sell into this, and we'll revisit the door low. 4776 is the halfback from last week. It's kind of the line in the sand that we want to keep track of. And where we closed last week, it's a critical level that can't lose track of. So really big indecision bar after this big outside bar here. None of this looks good for a bullish breakout. So it's not to say that that can't happen. We've got a lot of catalysts sitting in the economic events of the week. We could get news that pops us and drives us through that. But just on price alone, the fact that we came up to this high and we didn't set an equal high, that's a really big deal because this is now a lower high. The only thing that doesn't just make me want to call a short from here is the fact that we haven't pulled away yet. And so this is technically still not a lower high yet. It's still just the drive up off of this low. So until we leave this zone and start to fall back, and we can look back and say, oh, hey, that's a lower high. Until we can do that, it's not a lower high. It's still just a part of this drive. If we do leave this lower high behind, then the focus is going to be on getting below this 4,700 down here and expanding to the downside with a target at 46. We're a long ways from that, though. Ten-day, 30-minute volume profile. We have the classic D shape at this point. Now, throughout the first part of the week, we're going to lose some of this volume off the highs here, but we have more recent volume from those same levels. So not really expecting to lose the point of control yet. I don't think it's going to shift much at all. We got a very narrow distribution. And between the full 10 days, we're close to 150 points. It's not bad. We've seen it much shorter than that, and we've certainly had it wider than that. So this is kind of blah. You know, there's nothing here really exciting. Nothing stands out as extreme or excessive, and it's not super crazy compressed. It's very just neutral, middle of the road, nothing. One of the things, you know, about using indicators and doing analysis is if there's nothing there, you just got to own it and just say that there's nothing here. Dig deep into something that really isn't offering you anything, then you could just, you know, overcorrect in your analysis. So we got a discrepancy here between where the volume is this morning in the Globex and where we've spent the most time. Now, instinctively, where price has spent the most time, it's where you would expect to find the most volume. That makes sense, right? If we spend all of our time right around that 4,800, then you would expect to find most of the volume at 4,800. So volume by time here in blue with TPO, time price opportunity, TPO, shows us 4,800 as the point of control. But using a volume profile, we landed in an iceberg this morning. So on that drive to the downside, we got into a very large liquidity pool. We weren't able to get through that. We came back up off of that. They really defended this low, which is impressive. Although, I mean, we spent a considerable amount of time there. So, all right, we're above the yearly anchor. It's about all that we can say at this point. Remember, we measured last week what our new week's range was. And at the time, it was not much of a change. But we were looking at it Friday morning, and we need to look at the range on Friday after 4:15 or, this morning. So we take last week's range and set it on this week's range, and we're able to kind of get a little bit of a feel how much more or less volatility is there. This range is designed based on volatility. So the more volatility we have, the wider the range is. I just moved the box from last week to this week, and they're exactly to the same size. So we've really got a lot of volatility priced in this week. Remember, last week was a full week. There was 5 days. So that's 5 days of volatility. This is a short week. There's only 4 days, and we have the same amount of volatility as we had last week. So less days, same amount of volatility as last week. That's more volatility. It's subtle. They slip it in there, but it's in there. Volatility is a nerd word for movement, and implied is a nerd word for promise. Put those two words together, implied volatility, promised movement. So when you have high implied volatility, you've got a great expectation for movement. Ten-day moving average, or just barely above it. We crossed back over it again in the Globex, where we went below it, we popped back up above it. And it is on the decline from last week. We slowly worked our way down to it. And it doesn't really show here yet, but we did cross below it and get back above. On the 10-week, however, we're still holding above. We're more than 2% away from the 10. And sure, it looks like we're on the decline. One little pop to the upside, but still the expectation is that we're going to continue to work our way back towards that 10. We got a lot of names coming into or around their 10, gapping down below their 10-week on a Monday, or in this case on a Tuesday, start of the week, gapping down below the 10. That's crazy bearish. So, just kind of keep perspective. It's not like we're talking about revisiting last year's lows and that kind of stuff, but it's a very bearish posture to gap below the 10-week, especially to start the week gapped below the 10-week. So look at the equities that you're thinking about trading and keep your eye on where that 10-week is and whether or not they gapped down below it. Like, I think Tesla did it last week. I think it was Tesla. Maybe it was Apple. One of the FANG names did it. So we look at the sectors over the last 5 days, and we can see tech almost 4.5% as a 5-day change. It's the biggest 5-day change on the list. Top 3 here are risk on, be a bullish backdrop. The bottom 3 are risk off or a bearish backdrop. But you can also consider it a little bit like growth and value, right? You got your tech across the top, your staples and growth, the value names across the bottom. So we're still not seeing that rotation. Everybody kind of thought we were going to get a little bit of a rotation, but we had 5 solid days maybe not so solid, but definitely 5 days of green in tech. We didn't get any help out of consumer discretionary though. So kind of flying blind and certainly no help at all from financials. So one thing about holidays that tends to screw up the brokers and screws up our charting is these half days. Monday won't be recognized by a lot of the brokers on the futures products. It's still going to consider all of that volume, everything from Friday or from Monday as a part of Friday's price action. So for your range, one of the things you might want to consider doing is measure Friday and just tuck Monday into it. Monday until 6 o'clock, because our Globex over the last 13 hours, that has been a true normal Globex. But Monday, you could just put all of that into Fridays. And that gives us 48.14 for the halfback. $4,800 is our halfback from our own Globex this morning. So we kind of got some levels to deal with here. It needs to hold that 4,800 from this rollback. From that drive right there. Now that we've come back up and we've gotten above the halfback, we've got to keep it. So if we can keep it, we'll focus on getting back up to our own Globex. That's the cog line 4811. And if we can get through our own Globex, which is also the halfback from last week, from Friday, then we'll target that ADR half up here, 4832. On the bullish side this morning in the scanner, we've got nothing. I mean, there's just nothing on the bullish side. On the bearish side, TLT is leading or brings up the lowest point. Let's say it that way. Down 0.5%. And then banks, Bitcoin, China, gold, and more China. You know, an interesting thing on gold, they were talking about it over the weekend, and they mentioned how gold right now is strongly correlated with equities, with stock, and normally it's not. So it happens sometimes. Things that normally are divergent are working together. It even happens sometimes in the VIX, right? You'll have the S&P and the VIX both going up or both going down. It does happen. It just doesn't happen very long, and it doesn't last very long. But this situation with gold and with stock, it's lasted long enough that it's starting to get people's attention, and there's some talking about it. when it starts to disconnect, it very likely won't happen, like snapping a rubber band. It won't be sharp and quick and immediate. I don't think it will. But you want to start watching for, some kind of, a little bit at a time, watch them start to diverge. Positive on the day. Both shouldn't close green. Both shouldn't close red. That'd be a good start. I don't think it's going to be tick for tick, right? One price is moving up and the other one is immediately moving down like a teeter-totter. I don't think it's going to be that sharp. But I think there's some opportunities there. If we can get some divergence, or actually just get gold and stocks doing what they normally do, which is diverging from each other, that can play well with the US dollar Japan that we were talking about and dollar yields. So right now, US dollar Japan has that ADR half at 147.10. We don't even want to see it get that far, right? Even being above the ADR half right now is bad enough. But if we continue that advance to the upside, that's the line we want to keep track of. We're already above all the major moving averages. We could see the 20, the 10, the 50, the 200 on the daily, and we're above all of it. This morning was that push that got us through the other 50 MA. And on the weekly, we got the 20 week up there, but that's it. And this is a solid breakout. The only thing we have is the ADR today as a consideration that, something that might slow this down. Otherwise, 147.5 would be a minor price point. And that's it. But this one's worth watching. If it gets overextended, hits resistance, anything like that, starts to pause in this drive to the upside and this run up, then, maybe can hopefully get a little bit of the same in the Dixie. Be worth watching. See that extravagant move this morning in the dollar index. So the good thing is it set a high. That's now going to be our resistance. And if that resistance can hold, stop this from running higher, it gives the S&P and the NASDAQ a chance to continue to advance, at the very least, to get back to where we opened last night, get back into the green, right? This holding steady would be the start to some tailwinds, but this falling would really help the S&P. And then the 10-year. Now, in another 10 minutes or so, you'll be able to use the TNX. You won't have to use this necessarily. And it's not as stretched as the Dixie, but still same thing. We want to see this kind of hold the line, maybe even fall back, get inside this range here, not outside of that range. Yeah, one of these are off. Something needs to change. So you can see this run up in the Dixie and that little bit of a pullback here. This run up in the S&P and just a little bit of a pullback. And then we got the 10-year holding the highs. Really looked like it ran really quick, and it's just been holding the highs since then. So none of these moves that we've been seeing, it comes with the 10-year to it, or the 2-year. But we want to see this break, call it 4.2, get through this Globex low that was set here on this pivot point, and then get back to, say, where we opened it yesterday. It'd be a nice drive. Remember, we got the auctions today on the front end. All right, so pot stocks continuing this expansion. Really, I mean, this is some bottom fishing trash. And sure, you know, everything could turn around. We could get some legislation that changes everything in pot stocks, and these left for dead trash can actually start to come back to life. But there's a lot to be said there, right? A lot of wishful thinking. What we can say is we set that low at $5, at least on MSOS, and it's holding above that, you know, a good $3.50 above it. But we also set that high at $10, and so far we haven't been able to work through it. But we're up this morning. It's a good start. Got a lot of work to do, and it's not just MSOS as that ETF, but there's also MJ. You know, between those two, you can open up those ETFs and see what's inside them. You know, maybe trade the underlyings instead of the basket. Uranium stocks are up. CCJ, by the way, was on the put call scan this morning. I believe it was right up into maybe call resistance. Let's scroll up and find it. All right, so this was 0-day or front week options as opposed to all the options. There it is, CCJ. So really high IV rank, and 50 is resistance. It was sitting at 49.92 when this scan happened. Of course, I think it's up since then, but if it gets above 50, it puts that call resistance underneath it. It will act as a little bit of a support, but what we'll want to see is we want to see them starting to roll those calls. So we'll want to see a lot of call activity on that 50 strike as they get out of it and move those calls. That'd be what I'm looking for if we do get that kind of a move. Otherwise, if it's resistance that holds, then we're going to expect this to fall away from that 50 point. But I mean, look at this thing. It's been a monster. If it does pull back, I would target the half back of this really big candle, and I wouldn't try to get more than that. Because we're talking about looking at a little bit of weakness. We're not talking about, you know, trying to short the strength of this thing. Counter trend to pull back, you know, a couple days, maybe Friday expiration, just trying to hold below 51 for a few days. It could retrace all the way back to 47.25, give us a Busby off of this breakout level. But I mean, I'd still approach this with caution after such strength, right? And look at how it responded on the last pullback. Really clean. And then a clear expansion, and now a new pullback, still really clean, right to year-to-date VWAP, and expanded again. Perfect springboard, beautiful trend. I wouldn't try to, you know, long-term short this thing. My expectation for this, honestly, is that it's going to break through that 50 and it's going to expand above it. And we want to watch to see those calls get rolled for kind of confirmation. Crude, or at least USO, is also up this morning. And I mean, that's our market this morning. We've got pot stocks, uranium, and a little bit of crude. Everything else is down. We want to see that dollar 10-year flip with US dollar Japan getting into some resistance, maybe falling back. And that can get us back above the zero line, or back above, you know, our Globex open last night in the indexes. But we need some tech and we need some finance. This is that kind of a homemade FANG index, or the Magnificent Seven, however you want to look at it. We're gapped down this morning from where we closed on Friday. We've still got indecision candles. Now we gapped below the 3, but we're still above the 10-day, the 20, the 50. We're above all the major moving averages. If we put this on a smaller time frame, this is just a cup. Maybe even, like a double top. And just like a good double top, it expanded farther than the previous pivot point, because double tops are bull traps. So it's supposed to convince bulls to get in there and take the breakout so that we can trap them and squeeze them and pop their heads off. But that didn't look much like a bull trap, right? It barely wicked up through there and then fell back down again. So here we are on the weekly. We're above all the weekly moving averages. And last week's weekly range is what we want to focus on. The number isn't really going to matter because your weights might not be the same as mine, but you can use NY Fang. You can put in your monsters of tech with no weights at all. You're still going to get a chart that's very similar to mine. It doesn't matter. It doesn't have to be perfect. The main thing is this high right now is a sell zone. And until proven otherwise, every time we get into it, we're going to have to expect that selling to continue, only as a defense into that level, not as like they're going to come out and just start shorting the market and selling everything. So a lot of liquidity overhead. We've got to get that out of the way. Moving averages underneath this as some sort of support. And last week's range with 50% as a line in the sand that we need to keep. I will mention, by the way, that unlike the S&P, when we're doing pure price analysis, this did give us a higher high. Remember, in the S&P, we didn't get that. So we don't have that to say. Well, we have it in the SPX, but in the ES, we didn't get it. And that's a divergence I haven't really thought too much about yet, but we're going to need to dig into that at some point, because the SPX, having already broke through that previous high, that gives us a continuation pattern. It's not enough yet by itself because we didn't stick it. We didn't keep it. But the fact that we didn't close up there to convince bulls like this was some kind of bull trap, it leaves the door open. Just got to get through more this week and see the data points and how it's going to change with this unwind on FOMC getting priced in. So not a lot of equity stuff yet, unless you're trading shorts. I mean, really, we got some nice setups. I'll just pick on PayPal here. We got this really big bar And you can do the whole bar, or you can just do everything from the open. So really clean half back. It's the level that we've really been fighting against this morning. A breakdown below our own Globex low, we can measure all of this and project it to the downside. So you're looking at 59.5 or 59. Same setup with Apple. $181.5 and then 180.5. Tesla's holding above the half back. Measure it the other direction. Half of that move to the upside would get the gap closed. That'd be 218.82. And then 220.75, call it 221 for 100% of that move. Otherwise, if we fail to get outside of this Globex candle, then trigger short below 215 and expand to the downside. Same thing with Apple. You know, if it gets back above this halfway point, then we'll focus on this year-to-date VWAP, get through that, and we'll try to get this gap closed. I just don't see anything like that today unless some kind of news comes out. That's a big beat down. JP Morgan already closed the gap this morning, so this one's kind of ahead of the game. Breaking this Globex low will give you some moves to the downside. Targets 166.5 and then 165.5. Amazon showing what we were talking about with Tesla getting through that big candle. Amazon failed to get through that big candle. So right now it's still above VWAP. It's still above this half back. So it could find support and it could try to retest this upside for a breakout, get the gap closed, and then focus on Friday's levels. But if it fails here, falls through the VWAP, breaks through the halfway point, there's your trigger for a short. As we get into the open, we want to see if we can get through 152.5, this low end. And if we can, then we'll target year-to-date VWAP down here. I know it seems like it's a long ways off, but it's not really as far away as you would think. That's 150 is the target. I'd go for that. Google, same thing, got the gap closed, but now it's coming down to test that low. If we break our own Globex low in Google, the target is year-to-date VWAP 139.5. Really good setups on a lot of these FANG names this morning. And those Bitcoin proxies, Coin, Riot, Mara, MSTR, Hut, Hive, all of those, we're going to expect to see continued weakness in them. Everybody be careful, be safe, have a good morning. I'll see y'all tomorrow.